Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name is Doc Severson. I'm joined here with Dave Lukas of 12-Minute Trading. Today is Monday, the 7th of Crashtober here in March of 2025. And, here we are. We're down 20%. We finally hit the 20%, and that happened in nearly record time. I mean, this is really comparable to what we went through in the COVID pandemic, market crash. The one thing I will say, everybody is like, okay, 2025 is going to be a bear market, and you could certainly make a case for that, that it's going to be an extended bear market, which is typically 18 months long for that. However, keep in mind, the one thing that I've always gone by is that the speed of the selling on the way down is always reflected in the rebound on the way back up. So don't be surprised if you see a very, very rapid rebound, even if it's to a lower high sometime in the near future. The market is searching out there for any kind of certainty right now. We saw a 420-point reaction intraday, which is nuts. I've never seen anything like that before in the span of half an hour. 420 points on the S&Ps, just incredible.
Yeah, we're literally one Truth Social post away from a 10% move higher.
Yeah,
I mean,
true.
that's what we saw today was a rumor that tariffs would be suspended for 90 days that wasn't even confirmed, and all of a sudden, the S&P was up 200 points, in that span of time, or 100 plus points, and then it all fell apart when that was proven not to be true. But that's the world we're in now, at least at this point in time. So that's the and that's why I keep saying, like, I don't think it's over yet. We'll see. We need to get the most certain thing that would really get this market going is a deal between the US and China. If that was done, I think you'd see a massive rally that could sustain itself. EU's good. So we'll see. They came out today and said they're willing to do 0 for 0 on things. We'll see if anything happens there. But until we get the China thing kind of worked out, I think the market kind of stays in limbo. Trump reiterated it today. China, he said he's going to go to, if China goes higher, he's going to go to 50% on China. So this whipsaw is kind of what you can expect. I think some of today though is we are so far outside like the Bollinger Bands on the daily, the weekly chart, and just so far stretched. Like anything to get this kind of back into that range, it'll take, right? So we may get. I'm watching the charts here, even like on the Qs. We're 10 points out from getting back in that range. So just 10 points higher, and we're back inside the Bollinger Bands on the daily chart. So, like, I think that could easily happen this week, and then juiced by some headline if it comes out. Otherwise, days like today may be the norm for a little while.
Yeah, this is the classic, range. Range contraction leads to range expansion. We had a very choppy end of 24, and things were set up, and this is why we were somewhat reticent about putting any capital into play as we got into the end of 24, because we had charts just wound up like crazy, and we
Yeah.
even took some abuse for it in this room here. But
Yeah.
it's sometimes the best thing to do is to do nothing and let the market
The
like
best trade is
tell
not
you.
to trade sometimes. In
Yeah.
fact, Chalupa man, Dave and Doc, all of 24 and 2025, all bets are off. We've been saying it, and we're trading through it. Like I've got a few trades I'm working through this, but most of the from a newsletter standpoint and everything, I think it's like 5 trades, and I trade hundreds of trades a year, right? So I'll take working a few to get through and deal with this, but I haven't put new money to work. I'm keeping it on the sidelines right now. I want to see if we can sustain, any type of level, right? I mean, today's a one-shot wonder. We could fall 20% tomorrow. So, until we really get a good established, solid, level of support, I'm just chilling, working a couple trades that I've got to work. But for the most part, give me that signal, and we don't have to call it. I think, Doc, you would say, it's tough to call a bottom, and you don't have to be right. You just have to, get on once you do see it established and take advantage.
The one thing I've noticed about, like, um, I would say that calling a top is probably the toughest thing I've ever had to do.
Hmm.
I've never been able to successfully call a top, even though it seems to be that everybody on X and Facebook and whatever is, pimping to, oh, I told our subscribers to, you know, we honestly we've been warning people for the past 6 months that hell is coming, and we're trying to trade through it, and it can be very difficult to do that. But keep in mind, I mean, what I like is that the price has found trend line support here. Now, there's
For
there's nothing
now.
there's nothing that says that
It's a big trend line, though.
it is a big trend line. That is a big long trend line that goes back to the COVID lows, and you can see how violent, like when I remember going through the COVID move, that was really, really violent. We had a lot of limit down days during that on Sunday nights that we would,
Hmm.
like the market would just stop trading on Sunday night because it was already down 7%. We had to wait for the Monday open. So far, we have not gotten any of these. Now, what I think is a possibility is that we could rip higher into a lower high and then consolidate, and then, one of two things will happen. Either we're going to see this, try to make a run for the highs, even though I think it's going to be ill-fated, or we could see another leg down. We certainly
Hmm.
could, because I think there's so many downstream effects that we haven't even planned for in this.
Well, the
One,
tariffs aren't even really into effect yet. They don't go into effect till the 9th. So we don't really know, number one, between today and 2 days from now, what's going to be on what or who. And then once they do go into effect, what are the ramifications? You know, I mean, think about it. If you guys are a business owner, or I own businesses. I've got another software company we're building right now, and thankfully we don't have to deal with tariffs, right? We're U.S. based. We sell in the U.S. market, right? So we're doing really well. But I couldn't imagine if you are a company that, because of competition, has had to source overseas for your products or something like that, and yeah, you probably were making some preparations ahead of things, right? Going into, once Trump was elected and stuff, you knew, quote unquote, tariffs were coming. But nobody expected, kind of how they did things on this, right? The messaging wasn't great. It was just, we're going to do tariffs, and then all of a sudden, we set a meeting after 4 p.m. on a Wednesday, and say, okay, tariffs are going to be, for whatever calculation we created for it, are going to be X, Y, and Z across the board. Like, how do you run your business with that? Like overnight, all of a sudden, you're getting 50, 60% increases on the cost of your products that you're importing into the US and all that stuff. So it's a really tough thing to navigate for these guys, American companies, that have to bring things in. So that all has to shake out.
well, a lot
And
of
I don't know how it'll shake out
a
yet.
lot of people
Yeah.
have forgotten what our market was like during the first term of Trump. Now, a
Yeah.
lot of people remember what happened in 2017 because we got this almost uninterrupted first year. And
Yeah, he
then,
didn't do tariffs in the first year.
yeah, and then everything started to fall apart. This is where we ran into problems with Jerome Powell. Jerome Powell was going against what Trump wanted to do. Powell's trying to raise rates. In fact, he did raise rates
Hmm.
erroneously, and then came back from his position and said, "So, I was just kidding. Sorry." And then this was the tariff era here. We're just dump, rally, dump, rally, dump. And then finally we got some certainty in terms of that. And then, of course, we know what happened here.
Well, yeah, and the big difference between then and now is those tariffs were only China. And we
Right.
had a 13% drop on that, by the way.
Yeah.
I think it was 13 or 14. But that was only China. So now, it's on everybody. And, probably some of the people saw the things over the weekend of, like, the couple the island countries that don't have any inhabitants, that just have penguins, and we've got a 10% tariff
Oh,
on them and
yeah.
stuff.
Yeah. Heard
But
Island, which is down near Antarctica. Like, there's nobody
but
that actually
but
lives there.
like, and I imagine they'll peel those things off. But you've got the biggest problem, and why they, so just everybody knows, like, why, like, the question is, like, why is there, like, a tariff on every country? Why is there a 10% minimum and all this stuff, even countries that don't have tariffs? The reason being is a lot of these, there's games that are played on how to avoid tariffs or get things in cheaper. And so, like, what would happen is China would make things, they would send it over to Taiwan, put a Taiwan label on it, and then ship it in and not pay tariffs or taxes, right? So, like, there's a lot of that stuff going on. And that's what I'm saying. Like, who knows how this is going to go once things are really into effect and how it gums up the works or stops things, practices like that from happening. That's not right. But there's all of that that has to play itself out in the coming weeks and months and everything else. So this is different, I think, than the first time, just from that perspective.
Yeah, I agree with you because it's, I mean, it's all about how we communicate this stuff. Now, technically, which is, I mean, I've almost stopped listening to the news because I don't
Hmm.
gain any value from it because half of it is fake and you don't know what to expect from it. But I did want to bring this up here. This is the ATR,
No,
which is the
baseball.
average true range of this based on a 14 period sample. And back in the COVID days, we got up to 145 points a day. Now that was when the S&P was about not quite half of what it is now. I mean, it's rallied a hell of a lot in the last 5 years. But 145 points a day, which on a percentage basis is pretty incredible. But look where
We
we
have to be
are.
setting up for a new record now.
We are going to hit a new record. I mean, again, like today, we've already hit a range of 400 some points today. We're going to be smashing that record. If you go back to the great financial crisis, look at this. We had an ATR of 62 points a day, which on an average basis, because the S&P was 1,000 points back then, that's a big deal
Yeah,
to get a
yeah.
6% move.
6.2%.
Yeah, to get a 6% move is a big deal. But on a linear basis, we are going to be setting new records. And so, what I want to encourage people to do is, and this is what I was walking my trading room through this morning, is if you have a long portfolio, look for bearish trades. Even if you think the market's going to bounce, look for bearish trades. Sell into,
Hmm.
establish bearish trades into moves to the upside. Because it's what we do is, or at least what I teach is what's called the dual pane fractal. Do you remember that? We've talked about the dual pane fractal. And we use things like this, like the Heikin-Ashi candles, and it's a simple concept. Trade in the direction of the anchor chart swing. When the anchor chart is showing all red, find ways to get bearish trades into play. Now, when this reverses and starts printing green candles, we'll do the opposite. But for right now, every time we see a big pop in the price, any kind of pop in the price, especially below this 21 EMA, which is this moving average here, we should be looking to short this thing. Now, eventually, like I said, this thing will start to reverse and will reverse violently, and then we'll ride this thing back up. But have a structure, especially if you have a long portfolio for right now. Find a way to fight back, even if your bearish trade gets blown over. It's of no matter because the rest of your portfolio will compensate for that, and it gives you a chance to feel like you're in control again, like you're doing something. The worst thing for most people is that they're just getting run over, they're getting blown out to the downside. They feel like they have no control. There's no trade that they can set up because things are out of bounds. But it's like that is one of the edges that we have. The other edge that we have right now is mean reversion. I mean, look at this. We're at 100% IV percentile. So over the past year, we are 100% of the values over the past year are lower than what we're seeing right now. So this will mean revert. The VIX will
Hmm.
mean revert. If we could look at the VIX here, this is going to mean revert. We hit 60 this morning. So this is pretty common for us to hit, like, it's just spike value. This is going to mean revert. And if we throw a 20-day moving average on the VIX, you're going to see where the mean is, and it always goes back down to the mean. And this time is no different. So here's the mean down here, which is rising. It's up to about 17, but I would say within a couple of months, we're going to be back down to that mean again, which will be about 20 by that point. So that's mean reversion, and this is something that we play all the time. And so you've got to have these principles of edge right now in your trading.
Well, and
So,
I'll tell you, if you're somebody that is wanting to stay out of the fray and isn't, doesn't want to like even do short-term day or week or, even a couple week trading right now. Um, the way I started 12-minute trading all those years ago when I was working 80, 90-hour weeks building the company was I think I didn't have time to sit in front of a screen or even look at stuff. So I needed something that would just work, that moved more slowly, was easier, and didn't give me, have the need to even look at a screen, right? To do it in just a few minutes a day, right? That was the whole point. And so back then it was only monthly cycles, right? Every month there was only one option cycle every single month. And so, I had to figure out something that would, be worthwhile, right? But protect me and put me in a really good position. And so my tried and true strategy, which I'm really going to go back to, with the IV spike that we have right now, with being as low as we are outside the Bollinger Bands, I'll probably get on it this week with my newsletter, is my old school selling out, finding stocks that are on the bottom Bollinger Band, beaten up, exhausted in their energy, and then trying to sell for a 10% return on risk 4 to 6 months out between the 52 week or under or at the 52-week low. So, Doc, if you want to pull up a couple things on the screen, we could show like an example of this for you guys, right? So pull up Amazon. Amazon's trading at the lowest price in 10 years, right? So if you pull up Amazon with the Bollinger Bands and just do a 1 year chart.
okay, daily, or are you on a weekly?
Daily, daily.
Okay.
Daily's fine. So you can see, look at the low. It's 151 is the low over the last year on this thing. Okay. So it's like 25 points from its low. It's below the Bollinger Band. It's completely exhausted on the energies for look at that. And so what can we do? Well, if you go to, the options change, Doc, and just go look at August.
You also have some positive divergence on the
Some
MACDs.
positive divergence coming in. And I don't look at that so much with this. I'm just looking at the fact that this stock has gone so far, to the nth degree. And I'm looking at, can I sell below the 52-week low? So if you look at the, like a spread on this, you can see typically I'm coming in around a 10 delta, right? So there's that's the, yeah, if you want to just sell puts, you can sell them there. That's great. But if you look at a vertical there, you can go below that, right? Because it's a 5 wide. We just want to go after a 10% return on risk. So go to like the 120 by 115 and see what that's paying.
Okay,
So yeah, just adjust the strikes to 120 by 115. Put spread.
Let me get up some deltas here. Okay, so
Yeah, it'll be around a 10 or so delta usually.
so you're selling the 120, you're buying the 115.
Let's see what it pays.
44 cents a credit.
Oh, you're close. All right, go up to the 125 by 120. And I bet you get 50 cents. $50 a contract for a 5 wide spread.
Yep.
Right there, bam. So look at that. You are 50 points out of the money on a stock that has already dropped tremendously. You are basically another 20% plus below the 52-week low, selling that out to August. And you're making 10% return on risk. And the thing is these things move a lot slower, right? So you can see Amazon coming towards it versus like if you're trading intraday or trading like within a week where we get a 5 or 6% move, right? It's really hard to get out of that. But the easiest thing to do with these, you can set them up. You can set a stop if you want, or in a time like this where you're going to probably get a move that turns around, Amazon will go up 10, 15 points in a day. All of a sudden, you can buy that thing back for 10 or 15 cents, especially if the IV bubble starts to go down, right? And all of a sudden, bam, right? All that jack comes out of the options chain, if you will. And all of a sudden, that thing is worth, just 10, 15 cents. You buy it back. Best times ever, are really to do those type of trades. And you may be in it for 4 to 6 weeks, maybe not. we get a 5-10% move higher in the markets tomorrow, well, you're probably out of it. But the point is that you're really set up in a good position, right? Because that 52-week low, man, if somebody comes and the big players are watching that, they'll buy in there, all that stuff. So you can do it like you look at Amazon, you can do it at you can do it on all of them right now. Go look at NVIDIA.
Well, just to throw something different. I mean, this is how I would probably play something like that. I would look at a vertical, like right at your low, 150, 145, and I would keep the position small. You're getting a bigger credit,
right?
And if you look at the risk profile on this thing, you're getting, your risk reward on this is not too bad. But what I would do is, I mean, if you had to, I would take assignment of that, and then sell off the long put if you had to do something like that.
Well, that's what I was saying too. If you've got the money and you want to just set it up as a traditional, naked put with a defense on it.
Yeah,
I mean, that's basically it, right? You can, you just have to size it appropriately.
Right.
But it's that time, guys, where, this is. I can probably count 3 to 4 times in my career where there was an opportunity to make generational wealth if you did it right. And this type of move is one of those. They're it seems like they're more and more, and maybe they are, but the last time we saw a move like this was COVID. It was 5 years ago.
Yeah. What was the other one that you wanted to look at?
Oh, you can look at any of the mags if you want, NVIDIA, any of those guys. They're all in the same boat. And that makes sense, right? Those big players are the ones that get sold off because they let up. And so they lead down. Look at Palantir. You could probably sell in the 40s on Palantir.
Yeah, so I would go against the 200-day moving average here on Palantir, which is at 60. And if you did something like that, I don't know if I'd have to go out to August, but if we did 60, look at this, you're getting a 470.
Oh yeah, there's a lot, but look at the expected move. It's 28 points.
Yeah.
So it's more volatile because this thing started at $10 and shot up to like 100 and whatever, right? That's one of the reasons I do like the more mature players, like even like Meta. Meta's a good one right now. Amazon, even Tesla, you can sell about 100 points lower on Tesla. You can get in the low hundreds on Tesla, with this same thing. So just a thought for you guys, something to look at if you're somebody who's just like wants to make money passively and not sit there and have to babysit or worry about it and just let it kind of do its thing over the course of a month or two and exit, you're good. And then, even if it drops lower, you've got plenty of buffer zone, right? So that's another thought for you.
So here's a great question here from International Pet Center. Sorry if this is a stupid question. It's not, actually. It's a really good one. If you're willing to get assigned the shares, why would you not just buy the shares? Okay, so first of all, if I said, hey, I want to own Palantir. Now, if I desperately want to own Palantir, if I think this is a generational opportunity to get long Palantir, then probably you're correct. You would want to buy the stock. However, when we have these types of moves that offer, frequent pullbacks and stuff like that, what you want to do is it's all about acquiring it at the right cost basis. You want to get the lowest cost basis that you can. So what we will often do is part of the wheel strategy, we will sell several times to drive down our cost basis before we finally get assigned. I mean, look at this. If you sell Palantir for let's say $6.80. So it's $680 per contract. So instead of paying $6,000, right? Instead of paying $6,000, you're paying $5,320. You've already dropped your cost basis by an incredible amount on this, and you can use this as income as well too. So think about this. I mean, if you look at this trade, again, here's Palantir, here's where it is right now. If we sell to 60, then we've got all this area where we can be wrong. The price can go down and we can still profit on the trade. And if it goes below 60, then we will be assigned, and our cost basis is going to be somewhere down here at 53.20. So,
Yeah, think of it this, the way I always think of it, guys, is let's say you were going to buy an investment property and that investment property was $100,000, right? Are you going to go offer just $100,000 for that investment property off the bat? Probably not. You're probably going to come in lower, right? Because you know you're going to negotiate. So maybe you come in at 93,000 and they come back at 97 and maybe you settle at 95, right? That's traditionally, if you're, investing in real estate, kind of how you're negotiating, get a price and find something that gives you a little bit better deal. Remember, with real estate, especially, you make money when you buy, right? And so it's the same principle with naked puts. Naked puts is like buying a piece of market real estate at a below market price. Now, the beautiful thing about naked puts is, like, imagine if you went to buy that piece of real estate for 100 grand and you offered 93 and and everything else. Imagine if you said to the seller of the real estate, all right, look, sell it to me for 93,000 and I want you to pay me $5,000 to buy it from you at 93,000.
right.
What would they do? They'd laugh you out of the room. They'd try to get lost, all of that. But that's basically what you're doing with a naked put. You're basically saying, okay,
You're being
I'll take
paid.
your Palantir shares at $60, but you need to pay me $6.80 to take them from you at $60. Like, that's unheard of,
You're being
right?
paid to buy
And so
something at a pullback.
that's the deal. That's the benefit of it. And so, that's how you can really take advantage and how you can look at it, especially if you want a stock. Why would you pay going rate when you can get it cheaper? Or if you don't get it cheaper, you make a bunch of money anyways, right? That's the beauty of it. It just takes more cash to do like naked puts like that. If you're going to do 10 of them, it's 60 grand you got to come up with. That's where the spread, is a little bit more efficient if you have a smaller account, but you're different risk profile because you're not just getting put the shares. If you do that, you are on the hook to deal with maybe the loss in the spread. So what do? You got to know how to handle it and that sort of thing. So that's the difference.
Okay.
Mhm.
Are there any? We're just here for about another minute or so. So if there's any other questions, please let us know. We said this last week. It's like, yeah, we'll be here next week, and who knows where the price is going to be, and we don't know where the
We're
price.
falling back down now.
Yeah.
So we were up and now we're back down, and who knows what happened in the time that we've been on here. So all day long, every time it goes up, I just think of that South Park meme, and it's gone.
Yeah, that's right.
Like, and it's gone.
All right. Okay, guys. Well, thank you very much, and we will see you next week. And I guarantee we're going to get some price movement between now and next Monday. So there we go. Thanks, everybody. Enjoyed having you, and we'll see you next week.
Thanks, guys.